This is the Savvy Investor radio show and podcast. For help with your retirement, schedule a 15-minute phone conversation with the team at ProStatus Financial Advisors today. Just call 866-597-1040 and at thesavvyinvestorradio.com.
And welcome back to the Savvy Investor Radio Show and podcast with the team at ProStatus Financial. We have Ryan Herbert with us today, Lawrence Kiely as well. My name is Randy Cook, and we talk here on the show about different issues of retirement and trying to get you the help that you need because it is a very uncertain time. There's a lot out there that gets in the way of our retirement and a lot of details to plan through. That's why we introduce you to the team at ProStatus. And Ryan, there's a lot of, nervousness right now. Anytime the market does a lot of downside, you look on the financial news and their first question is this something or is this the beginning of something bigger? Well, let's talk about that a little bit. You hear the word correction. That's when the market goes down 10%. And that happens about once every year, every 14 months. So if you're in a 20-year retirement, you're going to see a lot of that. Then there's a bear market. That goes down 20% and stays down for like 60 days. Well, that happens about every 4 to 6 years. You're going to see a few of those. And then there's the big one, the big daddy, the 2000 and the 2008. And those actually happen about once in a lifetime. So we've seen 2 of those. So we're over average here already. Ryan, do you see people that walk in the door and they're more fixated on that big one, that 2000 or that 2008, and that's what they're worried about, but they're not worried about probably the little details that could probably add up to something big?
I think that most people are more concerned about corrections in the stock market, the small, 10 to 15% drops in the market instead of the big one. And I really just think it's a what have you done for me lately kind of thing. I think that those are the ones that happen much more often. Those stay much more current in someone's mind versus, 2008 was almost 20 years ago. The 2000 crash was 26 years ago. People are much, much more focused on, they don't want to see these slow chips happening in their portfolio to where, the stock market is just kind of slowly chipping away at their portfolio. They want to see, everybody always wants to see steady growth in the portfolio. Some people even come in and they want to see, big return numbers. And, it's always one of those things where you can't have your cake and eat it too. You're either going to have safety and liquidity, or you're going to have liquidity and growth. It's not too often that you can have safety, liquidity, and growth kind of all together. And that's why we always take this approach of, we want to make sure that we have the income that we need in retirement, because the number one goal for anybody going into retirement is I don't want to outlive my money. I don't want to run out of money in retirement. And most people, have this concern that if I leave my money in the overall stock market, that these drops are going to happen and I'm going to run out of money in retirement. So what Lawrence and myself and the team here at ProStatus do is we say, all right, how much money do you want to have to live on every single month? How much money are you going to have coming in either from pensions, Social Security, rental properties, anything that's going to happen, regardless of whether the stock market's going up and down, how much income do you have? So how much more do we need to reproduce? And whatever that number is that we need to reproduce, that's the number that we're setting aside for income, because I don't want to run out of money. I want to make sure that the money that I need for income is going to produce that $1,000, $2,000, $3,000 a month, no matter what happens, whether the stock market is going up 20% or we're in a 2008 where the stock market's down 35%, or if we're in a 2022 where the stock market drops 15, 20%. I want to make sure that I have the income, because once I make sure the income is secure, it pretty much takes all of the worry, the true worry over the stock market out of the equation for people. I don't get a lot of calls when the stock market's doing what it's doing right now, when we have really, really high volatility, because with all of our clients, we've taken the step to make sure that the income is secure, because once they have the income coming in every single month, yeah, great. The stock market's down 5%. Ryan, do we need to do anything different than we're doing now? No? Okay. Ryan, the stock market's down 2%. What should we do? I never get any calls when the stock market's going up, but because we take these steps of making sure that the income is secure, I get very, very few calls about, hey, Ryan, the stock market's going down. What should we do? What about you, Lawrence?
I mean, it's funny. I think we've trained our clients so well that the few calls that we get or emails that we get when the stock market is going down is, hey, should we be doing some Roth conversions right now to take advantage of the down market? And that way the growth on the Roth side, the upside is better on the Roth side of things. So that's, I guess, that's good, right? Because we're teaching our clients and they're becoming more and more savvy when it comes to Roth conversions and these strategies. So that's really the only calls because, again, we've secured that income side of the bucket. So they're not really worried about, I'm depending on stock market growth for income in retirement. It's more so I want to be strategic about what's happening in the market right now to take advantage of tax planning. Is kind of the biggest, reach out I get as far as, clients when it comes to a down market is, should we be doing some Roth conversions right now? I want to do some more Roth conversions. So those are the calls I get.
So let me ask you this, because we have a tendency to focus a little bit on the negative more than we do the positive. And I'm getting that from Ryan and from you as well, Lawrence, because if I did my man on the street thing, I took my microphone out and I said, how you doing in the stock market? People would probably say, oh, I'm down 4% or I'm down 8% or I'm down 10%. Then you might look at them and say, how'd you do over the last 3 years? And, well, I'm up 50%. But, I mean, sometimes we don't focus on what the big picture is. And the big picture right now is we've had 3 really good years and we're having a blip right now. But Ryan, is that all people can see right now?
Yeah, I mean, they're just purely focused on the now because it's uncertainty. We don't know how much longer the situation with the U.S. and Iran is going to continue. The same thing when Ukraine and Russia started. We don't know how long that's going to last. Don't know. I mean, it's going on 3 or 4 years now, I think, at this point. Is this something that could happen between the U.S. and Iran? And that uncertainty, the stock market hates uncertainty and it always leads to volatility. So, they're only going to be focused on now. It's never really, hey, I made 20, 30, 40% over the last 3-4 years in the stock market. It's, I want to maintain what I have. I never want to see my accounts go down. And it's always a little tricky of a conversation that Lawrence and I have with clients. But, like he said, we don't get a lot of calls about, hey, I'm losing money because the stock market is doing X and Y. We try to be very, very communicative with our clients. The first Tuesday of every single quarter, Lawrence and myself and the team, we do an economic webinar that says, hey, here are the things that we're thinking about when we're making these portfolio decisions. Here's how we're invested now. Here's what we're thinking. Here's kind of what we're looking ahead. The war that we have going on with Iran, the military action we have going on with Iran is, it wasn't something that really could be predicted. It wasn't technicals in the market like 2008 or the dot-com bubble of 2000 that, has here's the exact reason why. It's one of those things where I believe at some point there's going to be some type of resolution. And what that looks like, I have no idea. But once that resolution happens, that'll get rid of the uncertainty out there in the geopolitical climate. And it'll give us stability in the market. And then this pullback that we're seeing, this momentary correction, it will be, if it ends sometime in the next month or so, it'll be pretty much forgotten about by the end of the year because the stock market should have recovered. If everything kind of stays kind of how it was as far as the underlying factors, the stock market should have corrected and people's accounts will start to kind of get back to where they were and if not start going up. And then, it's very commonly forgot about, which, that's kind of what I said is at the beginning of our conversation here is they only think about the short term. Nobody thinks about long term. Nobody thinks back to, actual major corrections in the stock market, but it's a great problem for you to have if you think that, I've taken the steps to secure my income so that when the stock market is down 5, 6, 7, 8, 9, 10% because of a correction, I'm not overly concerned about it because it doesn't have an impact on my day-to-day living in retirement. And, that really is, I think the key to retirement is of having that added peace of mind of knowing that I've taken steps to secure my income, whatever those steps might be. I have income that's going to come in every single month to let me live the life that I want to live in retirement without having to worry about the stock market. The stock market's up 20%, great, I made more money. The stock market's down 20%, well, I'm concerned because I don't want to lose a ton of my money. I don't want to lose all of my money, but I know that that's not going to have an impact on my day-to-day living. And that really is the way to approach retirement in our opinion.
You're listening to the Savvy Investor Radio Show and Podcast with the team at ProStatus Financial. Ryan Herbert is here. Lawrence Kiely is here as well. And Lawrence, as we talk about, if anybody comes to you and says, oh, no, we're down 2%, what should I do? We're down 4%, what should I do? In a sense, that person is asking you to be a market timer, aren't they? I mean, they're literally telling, let's get out, let's go to cash, and then when things get better, let's get back in. And that's been proven over and over again, even the people who live in this area, that is kind of a fool's errand, isn't it?
Right. I mean, that's not what we're in the business doing, is trying to time the market out for clients. And that's not our portfolio management style. That's not our goal for clients, is to swing for the fences and trying to time the market, because sure, if we get it right, that's great. But then when we get it wrong, you're going to have a big issue. So we're trying to focus on steady growth. We try to we do structure the portfolios to where there's a portion that is invested in the market. Again, that's our at-risk money, but we are actively managing that portfolio. But then we have the portion of the portfolio that is our fixed income, our bond alternative strategy, to where, again, we're capturing the upside of the market and we're alleviating the downside risk. So it is how we structure the portfolios for our clients. But again, the biggest thing is that first domino to fall is to make sure that we have that income bucket secured, so that you're not worried about having these conversations of, oh no, the market's down, or the market's going up. I can get more income out of this now. Sure, the market's up, great. You want to spend a little more, that's fine. But if the market's down, the number one goal for us is to make sure that you're able to live the lifestyle you want to live in retirement. And that starts off with securing the income bucket. So then we can structure the portfolio accordingly, so we're not worried about market timing.
That is all the time that we have on this portion of the show. Lawrence will give you the last word on this one.
This is Lawrence Kiely. Thank you for listening to the Savvy Investor Radio Show and Podcast.
And this is Ryan Herbert. We'll see you, the Savvy Investor, next week.
Advisory services offered through ProStatus Financial Advisors Group, a registered investment advisor. Insurance licensed in Maryland. ProStatus Financial Advisors Group, LLC is not licensed in all 50 states. To find out if ProStatus Financial Advisors Group is licensed in your state, please call 410-863-1040. ProStatus Group, LLC is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through representatives of ProStatus Financial Advisors Group.